All three cryptocurrencies were higher for the week after new economic data showed that inflation is finally cooling down.
Well, I think markets are going to be saying to the Fed, hey, do you really need to keep going at all any further? You know, the skepticism among investors, I think, is really building now as to whether the Fed's ever going to get to this 5% plus that they're talking about.
In the meantime, though, in that short-term duration, what do you expect to see just in terms of that trading action? Is it likely to be very volatile?
In terms of trading, I actually don't expect it's going to be volatile. I think it will be pretty stable.
The strong performance of the markets these first 2 weeks of 2023 have surprised investors. All of this comes as inflation data from the United States shows that the consumer price index fell to 6.5% in the year to December. So, are we watching a breakout in progress? Or is this a sucker's rally? Can the Bitcoin price rise more ahead, or will it go back down? A lot rides on the answer as investors wrestle with how to position themselves for the year ahead. In today's video, Raoul Pal has shared why he's bullish on 2023, especially for the crypto market. His comments came at the same time when Bitcoin crossed the 20,000 mark for the first time after 2 months. So stay tuned until the end of the video to know more details, as he has also shared his viewpoint on recession, Fed rate hikes, and the overall market outlook for 2023. And if you haven't subscribed to my channel yet, be sure to hit that subscribe button for more videos just like this one. You can also hit the bell icon to never miss any video. But without further ado, let's get into it.
But a lot of the direction is that the inflation weight is less, and therefore the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, you know, emerging markets go up, gold goes up, crypto goes up, equities go up, you know, that whole story.
Bitcoin surged over $21,000 on Saturday amid optimism that it may have bottomed and inflation may have peaked. Bitcoin hadn't been above $20,000 since November 8th, and Monday marked its 13th straight day advancing. Second largest Ether surged as much as 9.7%, and it's trading around $1,500. Other tokens like Cardano, Solana, and Dogecoin also notched solid gains. The gains came amid a report on consumer prices last week that showed inflation declining in January from December levels. The Federal Reserve is on track to downshift to smaller interest rate increases following the further cooling, though it's likely to keep hiking until price pressures show more definitive signs of slowing. That's helped boost risk assets like cryptos and the Nasdaq 100 stock index, which has gained for 8 straight days. As you know, in 2023, one of the most important things to consider is how interest rate hikes can impact your investment portfolio. So what do you guys think? How high will the interest rate rise in 2023? And how will that affect the stock and crypto market? Let me know your thoughts in the comment section below. And let's see what Raoul Pal has to say on this matter.
I'm actually very bullish. Now, the recovery from a bear market either comes 2 ways. Either kind of it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle, so that's out of the way. So we've got the downside of the rate cycle. It might stick somewhere in the middle, which I don't think they will, but let's say the consensus is right. It's the rate of change that matters. The rate of change comes down first, then sticks. So that's good for risk assets. We've marked down everything in value and price, so therefore the probability of a risk-adjusted return on. And then we've got, you know, I've been talking about this a lot, the exponential age technologies. We were talking about Tesla, but, you know, anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing. There's so many users on it. So that's the technology, and we've got tons of these coming. You know, the energy situation that you've been following so closely, you know, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but, the Peter Zeihan's of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, market's pretty positive.
Bitcoin's bullish momentum is showing no signs of slowing down, with the world's biggest cryptocurrency briefly cracking 21,000 on the weekend. This is a pretty significant milestone, considering that BTC hasn't been above this level since FTX collapsed into bankruptcy back in November. And since the start of this month, BTC's price has appreciated by 13.57%. The main reason behind this is the recent inflation report. The 6.5% figure was largely in line with what analysts had been expecting, and it could pave the way for a smaller interest rate rise when the Federal Reserve next meets on February the 1st. It's also important to keep in mind that interest rate hikes and their impact on stock and crypto investments are just one of the many factors. There are a lot of other things to consider, such as political and economic events, as well as global market trends that could affect the performance of the market. Let's get into the next clip to hear Raoul Pal's view on recession and China reopening and how that will affect the global economy. But before going ahead, don't forget to give a big thumbs up on this video.
Nothing's really changed because it was baked in the cake. 9 months ago, the economic data, and we've just been tracking that path. All the forward-looking stuff that both you and I use, business cycle forecasts have given us the calling of a recession for a long time ago now, and we're now playing out the latter parts of it. Now, we can argue and debate how long and how big it is. Now, but I'm hearing more of this kind of mild recession, soft landing calls from people. And I don't know really, I don't really see that. I see short and sharp, but I don't really see the mild element. Maybe it's to do with, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%. And that was it. It was kind of over and done with. So maybe there's something to do with nominal versus real. That means that prices remain, demand remains higher because of nominal. There was another weight on the world, which was the world's largest trading economy, was closed. So if you reopen, then the beach ball rises. So anything that has Chinese exposure is going to see a net marginal increase in demand from where they were. So I think it's just that. The question is does China coming back into the world economy mean anything yet to the global economy? My tendency is to think that China, again, we'll talk about this later, the Chinese credit cycle, the Chinese money supply tends to lead currently the Western world by about 12 months. So I think if we're thinking of what's happening now, then we've got a 12-month lead time before it starts filtering into the rest of the world as well in some respects. So, and the rest of the world, the impact on the rest of the world, people are like, well, China's opening commodities. It takes time because the Western demand is still going down. So it's really going to make a difference to the commodity market that so many people are looking at is when all three engines are firing. Europe, China, US. When those three fire, then you've got a potential long-lasting commodity rally. But without it, you've still got one or two of the legs of the stool missing.
A variety of factors, a sooner than expected reopening of China's economy, a warmer than normal winter in energy-strapped Europe, and a sustained fall in US inflation are combining to dissipate some of the gloom that engulfed financial markets at the end of 2022 and fanning hopes the world can dodge a recession. Goldman Sachs said that there's a narrow path to a soft landing. According to him, a recession in the US won't necessarily spell bad news for stocks. But Raoul Pal said that he couldn't confidently say that a possible US recession this year would be mild. Can the US avoid a 2023 recession? How will China's reopening affect the global economy? What can we expect from the Fed? How high can they raise rates in 2023? And lastly, will Bitcoin rally ahead? Let me know your thoughts in the comment section below. For more videos on crypto, market, and the economy, be sure to subscribe to my channel. You can also hit the bell icon to never miss out on any of my latest videos. I'll see you guys in the next video. Adios, and thanks for watching.